back to Market Movers, where we identify market-moving headlines and discuss ways to either hedge risk or create exposure to affected assets. We have Scott Martin.
Hi, Jim.
Hey, Scott. So, okay, first of all, let's just start the way we always start. The biggest headline of the week, and what's its impact?
I believe it's the looking forward, if you will, or the cautionary forward-looking statements with regards to reopening the economy, Jim. It's the flattening of the curve, to overuse that term, but also the markets and, say, economic reaction to the fact, Jim, that we maybe have some hope appearing where we're going to have parts of the economy, certain states of the union, potentially reopening here in the next few months as the virus subsides.
First of all, I completely agree. I think that's the biggest headline for sure. Earnings have been coming out this week, too. They have obviously been bad. People don't seem to be concentrating on them as much as the headline you mentioned. Is the stock market being too optimistic about the reopening? Also, you see Amazon, some of the FANG stocks have done pretty well in there, too. What's the whole story? Piece it together.
The FANG story is amazing because we talked about this actually last week about watching the NASDAQ, Jim, as kind of that bellwether for future economic growth and future economic recovery, which was spot on. But I will tell you, regarding earnings, I think the market is actually taking things pretty well. I mean, with respect to banks, especially this week, which have been in focus, the numbers are bad. And the markets already knew that. And we already knew that there was going to be some cautionary outlook from retail certainly coming out, and I believe from tech as well, as that will come out in the next few weeks. So the reality is this is not news to anyone. And certainly when stock prices, yes, have reacted somewhat negatively to some of the news, it could be a lot worse if the market was not prepared for it.
Okay, we just talked about a couple different sectors. So CME products, they have the NASDAQ, the options, the minis, and the micros, the same in S&Ps, the Russell, and the Dow. We talked about S&Ps and NASDAQ. Of those four, if we start to reopen, is the NASDAQ going to build on the strength they have? Do you think that's the best way to go?
I believe it will be, and this is because of the fact that I still believe the strongest companies out there in equity land are in the NASDAQ. If you look at balance sheet strength, if you look at revenue growth, if you look at debt-to-equity ratios certainly as well, you have some really strong NASDAQ companies that are out there. So for my money, I believe that if there is a bounce coming after, say, some certain pullbacks like we're even seeing today, I believe that the NASDAQ is where you're going to find a lot of that bounce and a lot of that acceleration.
Okay, switching to oil. Last week we talked about OPEC. Now, OPEC came to an agreement. Oil's still on its heels. We're talking about the numbers today, the supply numbers were historic in supply and historic in the low demand. We're talking about almost a panic level of supply here. Do you think that continues? Is it $20 oil magic, or what is it?
I like how you put that, Jim. It is almost panic level, and panic level on a lot of sides. I mean, panic level from OPEC as well with respect to getting it together when it comes to cutting supply, too. So crude land has been absolutely amazing. I've been watching the CL contract for the last several days and weeks, and there has been some amazing volatility in crude if you wanted to trade it. I believe that, yes, the long-term story on oil is not great, and especially with short-term, though, when we're getting these big downdrafts. You mentioned the falling crude even this morning down under $20. To me, you should watch those big volatile moves because we have seen bounces and retracements of big move days, but either up or down in the crude contract.
Okay, so CME, just go over it. They have the CL contract. They have weekly options on that. They also have the WTI mini contract as well that trades a lot of volume. Back to the last question. One of the things we like about futures is they're almost 24-hour access. Is that still a big deal in the coronavirus world?
Sure, because it's a 24-hour news cycle, and sometimes it feels like a 48-hour news cycle. So that's why I believe, Jim, in the futures market, it provides a lot of value for you, not only from the capital commitment standpoint, but also the access to the markets 24/7, relatively speaking, because of the fact that this is still a moving target with respect to the economy and certainly how we're dealing with the virus.
Thank you for joining us on Market Movers, where we are helping to make you a better trader.